All right, guys. I hope everyone's having a good night. Everybody's okay. All right. Uh, I had a, I had some few more. I had another question on the reversals. Um, some people are still not understanding the reversal pattern, so I'm gonna go over it again. Okay, I'm gonna go over it again until everyone understands. Okay. All right. So let's begin. Okay. So you see how this is a very difficult half the SM, right? Well, triple top, really. But in hindsight, you would have taken this, right? Double top, HOD is right here. You would have taken this, right? One, two, three, gold. And you would have took profit here. Remember, first take profit water, second mayo. However, they came right back up again and they threw this extra pin right here and got out back again. Look, this was gold. Don't hit the stop. Don't hit the HOD in front of me 3 times. Your entry would have been here. Beautiful. This would have been a fake W because right, and then bam, look at this drop. Okay. So my point here is that is not always going to be a perfect M. It can do this. However, remember all the pins to the upside. All right, all the pins to the upside. Okay, and your stop loss goes right here, about 23 pips. Okay, away from these guys. Okay, so they won't hit your stop. All right, away from this area. Okay, so we expect what? Stop on high drop, stop on hit the stops here, hit the stops, and probably consolidate back again, right? Okay. All right. Now I'm gonna break down the reversal to you, the pattern, the actual M and W. Okay. So pretty much the M's and W's are actually 1, 2, 3 setups. I'll explain. Let me get a okay. Just say this is the HOD. All right. So 1, 2, 3. If you ever heard of the 1, 2, 3, this is pretty much it. 1, 2, 3. Can you mute your mic, please? Whoever it is. All right. Thanks. Thank you. Thank you. All right. So isn't this essentially 1, 2, 3? So the technical retail traders take the entry here, right at the neckline, right? Retail traders take it here. This is late. This is late. If it pulls back, you're at negative. This is why we have to master this second leg and enter here. So if it pulls back a little, you're okay with it. You're not in negative and you don't start to panic and fear and that it might hit your stop and so on and so forth, right? Okay. You're supposed to actually enter somewhere here or here, okay? As long as the signals present, right? Just breaking down the M for you, 1, 2, 3, right? Okay. And then from there, you got it, hit the stops, okay? All right. So same thing on the W, okay? LOD here, right? LOD there, same thing, 1, 2, 3. This is the 1, 2, 3. 1, 2, 3. And then your entry, our entry is here. Okay? Not at the neckline. This is late. Neckline. This is late. Okay? I want you to start entering from here. Okay? All right. And stop loss. You know where it goes. 23 pips above or below where you are. Okay? And also keep in mind, just a reminder, the market maker will work the high or low for 30 to 90 minutes, but up to 2 hours, okay? Just giving you a quick reminder on these reversals, all right? Okay, let's continue. By the way, does anyone have any questions on the reversals? Anything else you want me to cover about them? You can write it on the chat.
Did I miss anything? Came in a little late.
Kinda. I just went over. I just really went over this, explaining that you won't always get a beautiful M. Sometimes it's gonna do this, but this is actually essentially a triple top, right? And all the pins to the upside. The HOD held the whole time. In hindsight, you would have taken this M, got out here at the Mayo, right? And then this is your second opportunity to actually get back in, because they came back to this area. Remember, if this area holds and does not break, you're good to go again, right? Stop on high drop. This is for the guys that get emotional. This was green at one point, okay? All right, but we know better. And then bam, right? Hit the stop, high drop, okay? Drop. So that's pretty much where we went to, and just the W and M 1, 2, 3 shorty. That's all you really missed. Not much right now. Not much.
Cool.
All right. Okay. Figure eraser. Okay. Next. So we got reverses covered. Now we're gonna learn about the peak formation low and the trapping volume. Okay. I'll explain it right now. Example, let's just say price came from here, came all the way, and then they did this. You've ever seen price do this? However, notice this though. Every subsequent time it goes here, it's higher and higher, right? All right, so keep in mind, this is the peak formation low, okay? Every time it comes to this area, it's not releasing the sellers who sold late, if you notice, okay? Okay? Each time they come here, they're not letting these guys profit. Okay, so I'll show you the upside right now, but this is very important because sometimes you're not gonna get always a beautiful W, okay? Sometimes you're gonna get these also, so I'm gonna cover these, all right? Okay, so each time they do this, they're not releasing these guys, right? Okay, so something important from here. If there's a greater buildup of shorter positions over the longs, get different color, over long positions, then the wedge kind of, if you use technicals, this is kind of like a wedge, right? Or however you want to call it. What is this, an ascending triangle? Or I don't know, what is it? But in our method, this is trapping volume, okay? So in this instance, there was more shorts than buyers getting trapped, right? Well, actually, it should have been a little lower, but here, somewhere around here, but okay. the wedge, quotation marks, will break up, okay, aligned with the peak formation low, okay. All right, so now let me show you the other way around. All right, give me a sec to get some of this out. Oops. All right. All right. The other example, the other way around.
Just hit mute right there.
What was that? Oh, I guess it wasn't for me. Okay. So we did this example, right? Okay. Now let's do it the upside. Price comes here, and then they start doing this, right? I know it's kind of crappy. I'm sorry. Okay. Same thing, right? Or make this a little higher, all right? Every subsequent spike up, they're not releasing late buyers. Okay. So if there are more, again, if there are more buyers and sellers, this wedge will break down, wedge or whatever you want to call it, okay? But to me, this is trapping volume. This will break up down with the peak formation high on this occasion, okay? All right, so this is the other way around. Okay. I had I had one of my students tell me that they needed some more help on the moving averages. I'll get to those too, okay? Okay. His question was, how do I know that you're in an uptrend or a downtrend based on the moving averages? To be honest, that's a very good question, but I can answer that for you, okay? All right, so I don't have these written down, so if you want to write them down, feel free. Okay, so features identified in a downtrend are the RSI, your TDI, right? Pretty much your TDI, the green, right? The green is in the 60 to 20 range. 60 to 20 range. And then I think what is here, like a 80 or 100, I forgot, but something there, okay? All right. M-tops. You're seeing M-tops with the downtrend. Remember how I said that these are gold, right? With the downtrend, if it's an M on the downtrend, it's gold. You take that. You take that, right? Okay, that's what I mean. Next, price is below the 50 EMA, your water, and 200 EMA, which is your Mayo. Price is here. Okay? These are the features when you are in a downtrend, okay? In a downtrend, all right? Okay. Let's talk about the uptrend now. Yes, 15-minute chart. Sorry, had a little audio issue. Yeah, 15-minute chart, Gio, okay? These are all the 15-minute. Okay. Give me a second, guys. I'm over here trying to find the uptrend one. While I do that, I think also someone had a question again on fractional disparity on the JPY pairs, if I'm not mistaken. So, example, just an example. This works in all of them, okay? So, if AUD is going to a level 3 and is in a choppy period, and you identify this, all right, just an example, AUD USD. This means that there is opportunities in AUD Japan, AUD chef, or whatever you want to call it, which is a Swiss franc. Okay, these pairs are being worked at the moment. If AUD USD is on a choppy level, okay, these could be better options to look for a clean setup. Okay, so same thing with USD Japan. Oh, it's kind of can't see that. USD Japan, same thing. Okay, if it's in a choppy period, you know they're working the other crosses. What are the other crosses? Euro, JPY, AUD, JPI, and so on and so forth, right? Swiss, JPY, and the other crosses, okay? So these apply to all of them, okay? To every pair. These are the different crosses. Same with CAD. If USD CAD is not moving, this means that they're working the other crosses, right? Which is, what is it? NZD CAD, Euro CAD, so on and so forth, right? Okay. So these apply to all of them. All right. Don't say it. All right. Okay, so a quick overview on the moving averages. All right. Crossovers of the EMAs. Let me show you a picture of EMA so it won't look weird. Okay, just as it's for now. Okay, so crossovers of the EMAs can offer entry triggers or confirmation of entry triggers when viewed in the right context, the context of the market. Okay, so for example, in this one, this is what I mean. Keep in mind your blueberry is your 4-hour trend in the 15-minute, all right? And yeah, I know this is an hour, but so this means this is the, what is it, the daily? Yeah, this is the daily, all right? Okay, so this is what I mean. They can offer entry signals, okay? A quick overview on the ketchup and mustard. The 5 and 13 EMA are the signal lines. What do you mean, Cash? Or I forgot, Cash. Can you explain it again, please? Okay. Signal lines. Remember how whenever you're in a setup, the mustard and ketchup start doing this also with price. with price, okay? Let's just say these are the candles with price, all right? They start doing this. This is what I mean, okay? All right. The 50 EMA is the balance line and shows the intraday trend. So pretty much the intraday trend, okay? The intraday trend. Price is here. This is the intraday trend, okay? Following the trend, all right? The 200 EMA is the home base, defining the longer-term trend, which is your Mayo. It should be around here. And how I said price likes to return to the Mayo, to home. Okay, I've talked about this, that it bounces off and continues rising, depending where you are in the cycle, right? Okay, something else. When the reversal occurs, the EMA crossover will follow, and this will provide a confirmation of the direction that has been taken. All right, so just to remind you a couple of examples. And it's this one. Oops, nope. Just, okay, yeah, here. This is a good example, actually. Just an example. You see how they start leading? They start leading with price, okay? This is what I mean. And these are strong, these are the mayo and the water, okay? And look at the ketchup and mustard. This kind of like a head and shoulders, right? This is what I mean. All right? This is what I mean. Also, when the EMAs are spread out and level 3 can be identified, remember someone did the homework today. I saw it. Very good job on the fanning. Remember that fan that I talked about? It started doing this, right? It is likely that the trend will be getting ready to collapse. The EMAs will follow rather than lead. What do I mean by that? I mean this. I mean, okay. I can't see that. Okay. It will start leading, right? Okay. They will start leading like in that picture I showed you. Okay. You say these are all the moving averages. 15-minute chart, by the way. Okay. Okay, muted. All right, thank you. All right, 15-minute chart, right? They start leading. Price starts coming around here. They're not following. They start leading with it, okay? This is what I mean. When their price is about to collapse, all a monster move, okay? Up or down, same thing, okay? Some of these out. All right. Also, how do I know I'm in the reversal period? The TDI can help you. How? A quick overview on the TDI, the volatility bands, which act as support and resistance, right? The blue lines. You see those blue lines, right? Those blue lines, right? And then this is your yellow is the market baseline. RSI is the green one. and the red one is your signal line, right? Okay. All right. When the bands recontain the RSI after the breakout, it is a sign, a weakening, and an impending reversal. This represents a stop hunt. What do I mean? What do I mean? What do you mean, Cash? I mean this. Remember that fin, that dolphin fin, shark fin, whatever you want to call it, right? Price does this and then comes back in. Remember, blood in the water. Okay. This is a good sign also when your TDI does this. I'm sure you've seen it a couple of times. Sometimes you see a monster move like this too. Like, you know, this definitely has to come back in eventually. You just can't keep going up and up, down, down, down forever, right? It has to come back in here, right? Or something like that, all right? Once we, like I said, once we understand the basics, I'm going to talk more advanced on the TDI. There are much more things I want to talk about. You can learn, like I said, there's divergence, and then there's also patterns in the TDI, and there's levels in the TDI. I'll explain those later on once we master the basics, all right? But yeah, okay, so that's what I wanted you to understand also. If you identify areas where the patterns all line up, for example, a four hourly pin bar with an hourly railroad tracks and a 15-minute W or M, and the indicators are strong for a reversal at this point, right? So remember how I said that the patterns work in every time frame, all right? That's also a confirmation if you don't know if it's a reversal or not. All right, I'll draw it for you. Okay. This is going to be the 4 hour. On the 4 hour, the candles are going to be different, all right? Oops. Okay, this is green, a solid green, 4 hour bar, red. Okay, this is what I mean. Railroad tracks on the 4 hour. When you're starting to look for a reversal, you can be like, okay, man, look, let me start looking at the bigger time frame and see what they're showing. If you see this in the 4 hour railroad tracks, and let's just say the HOD is here, so I won't confuse, I'm gonna make it blue. The HOD is also here. Okay. Now you go look at the 1 hour. And you see this, a pin bar, which can be this, which can be like, can be this, a doji, or whatever you want to call it, kind of like a hammer, all right, or a hanging man. I think it's called a hanging man or something like that. But anyways, yeah, you see this, a pin bar, I call it a pin bar, okay? With an hourly railroad track also, or some sort of bearish move, either railroad tracks or engulfing, if you know your candlestick patterns, railroad tracks or engulfing, if they engulfs this one, this is also good confirmation, right? Now, so check. Now let's look at the 15 minute. If in the 15 minute you have an M, a beautiful M, keep in mind the HOD also, right, on all these, right? Second leg on the reversal, you're good. This is another way to check with the patterns. If you don't like the moving averages, you don't like the TDI, you just want to trade naked in the patterns, that's fine. That's fine, by the way. I don't feel how do you say it? I don't feel like bad, okay? That's fine. You don't have to use the indicators I've given you, all right? You don't want to use them, that's fine. But this is another confirmation, okay? Just want you to learn this, okay? So the 4 hour, 1 hour, and the 15 minute, they all line up like this. Gold, you got them today. Don't be scared. Take your entry wherever you are in the cycle. All right. Your take profits, so on and so forth, right? Okay. Did anyone have any questions on this? Get right in the chat box if you had, okay? No questions. All right. Let's keep going. All right. Another question I think I had was on the, I believe it was on the ADR. I think one of my students asked me about the ADR. They asked me, this was the following question. This was the following question they told me. How do I determine if it's a level of rise or a level of chop? Right? How do I determine this is just going to chop around or is going to rise or is going to fall? My answer to your question is just look and see if the dealer filled the ADR or if he stayed within the chop. So what do I mean? If the ADR was filled, right? Usually if it's blown out, you'll have your ADR low. You've seen those lines before, right? ADR low here, and then your ADR high here, right? If it's blown out, most often because the dealer cannot exceed it no more, they cannot. This is like their rule. They cannot break this rule. Keep this in mind, all right? That's why it's important to look at the ADR sometimes. Sometimes on GBP JPY, for example, you're gonna see an ADR of like 150, right? You're gonna be like, okay, so it's not gonna move as much. I've seen the ADR of the GBP JPY up to 350 before, telling me, wow, it's gonna be a lot of movement today, right? So this ADR, this is why you have it, to guide you, to help you, okay? This is what you have it for. Okay, so you expect the markets to move, what, like 10, whatever, well, not 10, like 50 pips or 70, depending the pair, right? Okay, this is how you use it, all right? And if it's blown out, you're probably going to expect a small reversal like this back in the range. Or it's going to chop around like this. I've seen it before from experience. It's done it before. Either reverse a little, somewhere around here, back in the range, slowly. Remember, the true movement in Forex is slow. Or they're going to hold this level and chop around and start throwing pins like this, collecting contracts, hitting the buy stops and sell stops, all right? These are the two options they got. They cannot go more. They'll bring havoc and destruction to this world if they keep on raising or rising or dropping price. They'll get fired, if anything, okay? This is why the ADR is important, to see if it was filled, not filled, and so on and so forth, okay? So I hope I answered your question on the ADR for that one. Okay. Okay. I have less than a minute now on the webinar. Let me host a new one and I'll send you all the codes right now. Okay. and we'll keep answering questions that the students had. Okay.